So good evening, everyone. Yeah. So I've taken a long time as I drop in videos on this channel. I've been up and down, but we are back. So if you're new to this channel, just subscribe. Check for the link to our Telegram community in the description. Yeah, and you can share your setups with someone about that. So today we're going to look at a simple topic. It's not simple, but it's very key. It's one of the concepts that I use when I'm trading, and it would also help you in some way. Yeah. So I'm going to just talk about the few things that I look at. We're going to look at the ranges, then we shall look at operating range, we shall look at structure types, we shall look at demand and supply, just the concept, then discount and premium zones, then we shall also look at the micro and micro style of trading. But we're going to focus on mostly part three, which is the structure types. Now, most times when I'm trading, there are things I consider. I consider the type of trend that I'm in. It helps me find out how the market is retracing. As you all know, a retracement means an expansion will come in. Yeah. So basically, the type of trend that comes back to pick in more orders, it's what I'm trying to look for to determine how I'm going to trade that market at a specific time. So how do I do this? Let me just get a clean part of this chart. I divide them. This is how the market looks like. Let's use an uptrend. If I'm in an uptrend, here it looks so nice. Of course, we all know this is not how the market moves. The market moves in a much funny way. Yeah. In a much funny way, in the something like that. Very funny market movement. Yeah. We can see this okay, sorry about this, but just trying to correct something. So this is how the market moves. It's rare to find such a nice market like this one. Most times it's a zigzag, funny market movement. So not so right, up and down. That's how the market moves. So for example, if we are in, let's clear it down to just a small market movement like this one to the upside. So we have a swing high, then a swing low. Yeah. And most times when I see such something like this, I want to start getting the perspective of what the market is doing. Yes, it has formed a swing high. What am I looking for in the next movement? Yeah. So for example, this is where the move began from. This is our lower high, or I mean our higher high, our higher low, sorry. Then we have a higher high, then a higher low, right? So meaning this is the previous high. So what happens when the market comes and interacts with this high and breaks it, when it stops here, I know that, okay, there's been interaction. So for example, if it comes up here, interacts with this level, what do I be waiting for? That's when I start to analyze and get the different styles of market structure. Yeah. For example, we have the support and resistance market structure. Reason being the market has just bounced around our resistance that turned into support and now formed a new, it formed support here and it bounced off. That's what we call support and resistance structure, guys. On a different trend, like a bearish trend, it's the same. I'm just giving an explanation, right? So what happens when the market gives us a deep or a deeper retracement? Yeah. What happens? This is what we call a demand and supply structure. Because you see how it took away this support and resistance structure to come to this demand structure. Yeah. That's what we call a demand and supply structure. So you have to consider these two things. We have support and resistance structure, and we also have demand and supply structure. So what happens when it does this? It means the market has given us, before this move, once immediately the market starts changing direction like this and comes and enters back in here, we're going to have something called a range. Yeah, we're going to have a range. So meaning this will be our low, our higher low, because it's responsible for the break of this high. Get. So it's the one we're going to take. So allow me to delete this. So we're going to have a move like this. Yeah. We're going to have a move like this. Now, this is when you start, sorry, this is when you start to have so many things in play. Yeah. This is when you start to think about so many things. Of course, you can apply Fibonacci here. Yeah. Now, sorry about this. Let me just put back the essential points that I use. Yeah. Depends on the market. Most times I just go with this. So you start to think about the Fibonacci's, all that stuff. Yeah. In such a market movement. Then what do you do when you want to get to an area here? It's when you bring in something like fair value gaps. I don't use those things, but at times it's okay for sentiment. Cool. Reason being, now this is it's a deep retracement. Yeah. Where is it retracing to? You may not have a trend line here to support your bias or a psychological level. Of course, our strategy, you can have all these reasons, but you can imply and use demand and supply to trade such a market movement. So always wait for the market to either bounce off here or to, if it's a deep retracement, wait for it to break back in. Now, that's when we introduce a concept called, I hate this term, but premium and discount. Yeah. May I just use the word cheaper prices or higher prices. So if I delete this, what am I looking for? If I bring in my Fibonacci from here to here, I'm going to wait for a discount price. Now in trading, we have those two things. We have a discount price. We have a discount price. Then we also have what? A premium price. So if the market enters this area, it's last quarter of the Fibonacci, most times it's a discount price. It's where buyers are willing to buy this market cheaply. And when it bounces back here, this is what we call a premium, where they'll sell off. Yeah, but I rarely use this. So I'll just delete this. Now let's try to get those points on the chart. Let me just show you what I mean. So going back to structure, let's use our favorite pair, GBP/USD, right? There's a movement I got today. Of course, I got this sell from up here to down here to this order book. But look at this. If the market has moved all this far, where is it coming to? It's coming. This is a deep retracement. Now you can see how someone who trades support and resistance was violated here. Because if I just trade support and resistance here, you see, you look at show this market from here, but it's not valid enough. Instead, the market is giving us a deeper retracement to this area to find this trend line and then down. Yeah, because I expect this week to dump. Yeah, so you can see how the deep retracement comes in. Then look at this. This high happened, the market came back for a deeper retracement. But of course, this one didn't give us support and resistance. But it didn't give us support and resistance. But look at this. If we put here a high and the market just came here, broke the high, this is a market movement. See how it came back in here. It's a huge market movement on here that we're in a bigger time frame. You can see that this was our high, this was our low, right? So if the market broke this high, meaning this is the low that is in charge of breaking this high, you can see that it did this and came back to discount here and went up, yeah, and went straight up. Of course, now the other traders like ICT, all that stuff, they are going to bring in fair value gaps and demand, the basic demand and supply, where this can be, since there are three candles, this can be your basic demand zone, yeah? But I don't use that concept a lot. Yeah. So you can see how the market just broke through. Now, for example, so many people are caught in here for buys, but the market just kept melting down. Then, look at this. Look at this. Immediately it broke and came back in. That's when you get your discount price. But this is it didn't come back here, so you didn't take this trade. Yeah. So most times you're supposed to identify what type of market are you in. Yeah. Am I in the one giving deep retracements, or I'm the one am I in the one giving the support and resistance structure? So these are all the things I consider when I'm trading this market. I look at so many things so to get a clear picture of what's really happening in this market. And it's what I consider most of the time. So currently I expect GBP/USD to fall from here, maybe to around this area. Then I again wait for it to break our retest. Or it may just come in, tap in here, give us a much better one, then drop. Yeah. But I look at the type of market I'm in always. Because now support and resistance traders were caught in around here. Reason being we have our support turn into resistance and it's giving some kind of structure. Of course, this is a small market movement, someone got it, but imagine this pullback and someone's getting it for sell, meaning you want to be stopped out. Yeah. So there are so many examples we can apply in this style of movement. You see, so many out there. So you're supposed to just position yourself, know what the market is doing, and you get the best entry always. That's what you're supposed to do always. Yeah. So you can use it to your advantage. Know what type of structure you're in. Now, there's another strategy that I want to talk about right now, but I think we shall look at it in the class. Now, for example, look at this market movement. Market starts from here. People are waiting to buy in, they're stopped out. And again, once it breaks back in, they're waiting to buy, stopped out. But if you're someone who knows that, okay, once it's broken, this high is broken, and we have that retracement, this is just a deep retracement for me to get another opportunity to sell this market, yeah? And you can see that if you pull the Fibonacci, you can get, okay, this one can be the start of this whole down movement. You can see it can give us premium zone for us to short this market. Yeah. So there are so many ways of how to trade it. Look at it, support and resistance traders. What are they waiting for here? The break and retest. Yeah. But it doesn't happen. Market ranges in. Buyers are caught in here because they're trying to again to buy this market. But this is just a deep retracement for you to keep shorting this market. So there are so many ways out there. I just wanted to introduce one today. Yeah. So, and align your setups with the DXY. If you have seen how the DXY is moving, it has really been easy to trade the DXY. Let me just show you. Look at this. Look at this. The market formed some kind of pattern in there. Get sellers are trapped this side, market makes it back inside. So what are we waiting for? Of course, with the definition of support and resistance, this one looks to be respecting support and resistance. So, of course, you can follow it to the upside. So, this can just be a break. This can just be a break and a retest. Yeah, break and retest. So, all you have to do is wait. This market can push in here. You get, once it pushes in here, we look for discount prices. Of course, some people use what we call fair value gaps, but was already mitigated anyway. I'm saying it was okay. No, it wasn't. It's around here. I don't know if it'll come back, but if it does, we can get an opportunity to buy this market here for the DXY, meaning selling GBP/USD. Yeah. So all those are ways to trade the different market structures. Next time we're going to look at how to get a shelf. Yeah, how to get a shelf. I know there are strategies that have it, like of schematics, but as you all know, I try to make my trading as simple as possible. So thank you for watching this video. Like, subscribe, comment to the channel and all its videos, and see you in the next video. Bye-bye.